What's up, everyone? How are you guys doing today? We are going to talk about futures. You guys know me. I am 7-Star Mike as an options flow trader and technical analysis trader. But right now, we're in market conditions that are basically slowing the options flow down. So while we were used to getting 6 or 7 trades a day from the options flow, right now we're not getting 6 or 7 a week. So I've started looking at some futures trades, and I've got a very simple strategy to show you guys today. Neo is joining me. He can show you some charts and some levels that he looks at, because we trade the same instruments, but we trade them slightly different. So I'm going to show you guys my setup. I'm going to show you a very simple mechanical trading strategy that removes all of the emotion out of trading. We're actually almost getting a setup right now that we can take. It's going to be a little hard to trade while talking through this. So I'm going to point out how to set up your charts, what I'm looking at. And like I said, Neo can show you some levels on a chart that he looks at, because we might trade the same thing slightly different, but our entries are going to be pretty close to each other a lot of times. Not all the times, but a lot of times our entries overlap, even though we're looking at two different things. So for those of you who are brand new to futures, I want you guys to go to investopedia.com. They are very resourceful for information. Type in futures and you'll get a little list of what futures are. So we're basically trading the index. We're trading contracts on them, and there's two different ways to trade contracts. We have micros and minis. And what this is doing is basically allowing us to trade the index for much less than it would normally cost. Okay, so what we're doing is basically watching, in this case, this is representative of the S&P 500. So I'm watching this chart to find entries for the S&P 500 futures. So we are currently trading, you can see up here, MESZ2. That is the current month contract for the micro S&P 500. There's a mini S&P 500, and the difference there is that that's going to be 10 times the size of the micro. So for those of you guys with a smaller account, you want to start trading the micro E-mini S&P 500, which again, right now that contract is MESZ2. So there's a few things I like about futures over options. And one of those things is that you don't really have to fumble with the contract. So we're going to be trading this particular contract for a while. So you never have to pick a different strike or an expiration, whereas options, you have to pick a strike and expiration each time you want to trade. So with futures, we don't have to do that. So it makes it easier. You're going to be trading the same contract every time for weeks on end. The other thing we like about futures over options is that there's no theta, there's no time decay. So if you guys have been trading options, and you buy something where the underlying is at $100 and it drops to $90 and then goes back to $100, even though the underlying is at the same price as where you bought it, you're probably down 20 or 30% on your options contract. And that's due to the time decay and other factors. With futures, you don't have that. So right now we see the ask right here is 37.76.25. If I open a position at 37.76, and it drops to 3,500, which would be a huge drop, but then it goes right back to 37.76. Doesn't matter how much time it took to do that, I am zero. I am flat on my position. That same move with options, you would be down heavily. With futures, you are not down at all. You're at the exact same point where you bought it. There's no time decay on this. So that's another advantage of futures over options. The other thing is spreads. If you look at the spreads here, the bid is 3,777, the ask is 3,7 at the point, it was 377.25. So there's a 25-cent spread between the bid and the ask. And that's pretty much the same all the time. Sometimes it'll bump up to 50 cents. Sometimes you'll get a little spike for a split second and then back to regular. So a 25-cent spread. Whereas if you trade Tesla options, the spread might be 6 by 640, 6 by 680, right? So some of these options contracts, there's a wide spread, meaning you can't really do limit or can't really do market orders on some of these because you might get filled 60 cents difference from where you could potentially get filled. With this, with the 25-cent spread, I'm just doing buy market and sell market all the time. So market in, market out, I had zero concern for the spread because it's only 25 cents. So that removes another aspect of options when we switch over to futures. So there's some benefits to trading futures over options. There are some downsides as well. So futures are margin accounts, which means you can lose more money than you currently have. So you definitely want discipline when you're trading futures. So right here, I've got MESZ2 up. So, and I'm going to go through the chart setups in a moment, just kind of giving you some basic information now. This is the front month for the S&P 500 micro. Okay. On different platforms, there's different margin requirements. And what that means is in order to trade a single contract of this micro contract, I need a certain amount of money in my account. But that certain amount of money in my account does not cover the full cost of the contract. So you can lose more money than you currently have in your account when you're using margin accounts. So that's the danger of this. So you want to be really careful about your position sizes. If you guys are starting out new to futures, always trade the micros and always trade just a single contract. And then once you get comfortable with that, you can expand upon that. And the profit potential with futures is nice. It is very nice. But you want to be careful with the downsides. You don't want to position heavily. You don't want to average down a losing position. The other great thing about futures versus options contracts is, let's say you have $5,000 in an options account and you place two $2,500 trades today and you close out both of those trades. Well, you've used up your $5,000 in buying power, so now you can't make another trade until tomorrow when that money settles. With futures, if you have a $5,000 account and you're trading these micro contracts or even the mini contracts, you can place 150 trades a day if you want to. The reason for that is these are cash settled and they're settled immediately. So if I use $1,000 of buying power to open a position here and I close that trade, I can immediately open another $1,000 position size, immediately close that, immediately open another one. So there's no PDT, there's no buying power issues. Since it's a margin account and since they're cash settled immediately, you can have a $1,000 account. You can buy one single contract, close it, buy it, close it, buy it, close it all day long. So again, there's a lot of advantages to futures over options, which I'm starting to like a lot. And that's why I didn't switch over to futures 100%. I'm still trading options, but most of my trades in the last 2 to 3 weeks have actually been futures over options. I will never leave options flow behind because I think that's just the absolute easiest form of trading. But there are some advantages to futures over options, and since we're not seeing the right type of options flow that I want to see, I've been using futures to do very well in the meantime. Now, futures also trade after hours. For those of you that are junkies and want to trade 23 hours a day, you can do that. There is after hours trading for futures. Similar to regular market hours or regular stocks, the volume is a little bit slower sometimes after hours. So it's not something you want to sit in front of the computer for 23 hours a day. But if there's big news coming out after hours, you can jump onto the futures account and make some good money really quickly. Again, you can also lose money really quickly. So don't think this is a get rich quick overnight scheme. You can make a lot of money doing this, but you have to be careful because you can lose a lot of money just as well. Now, for those of you who do not have a futures account yet, let me do something really quickly here. I've got to grab a link for you guys. So our link is going to be for TradeStation. We have a deal with TradeStation. I can't post the link here yet. Let me see if I can grab this another way. I'm going to get you guys a link, and the TradeStation deal that we have means your margin requirements are going to be $500 and your commissions are going to be 25 cents. Okay, so these are the best commissions we have out there. On my screen, you're going to see Tradovate, not TradeStation. There's a reason for this. I do use TradeStation. The problem with TradeStation is if I show you that screen, it's going to show you my account numbers, whereas Tradovate does not show the account numbers. So that's why you're watching Tradovate, but I do recommend TradeStation. We've got a deal with TradeStation for great commissions. It is a very easy platform. And what I have on my TradeStation setup is the micro and the mini right next to each other with the chart on the side. So I've got the chart I'm watching at, and then one little move of the mouse, I can decide if I want to trade the micro or the mini. It's all one screen. It's all laid out very nicely, very easy. So I do recommend TradeStation for your futures accounts. But you're watching Tradovate on my screen for privacy reasons. TradeStation would show my account number if I show you that screen. So let's get into what we're looking at here. This is, again, the chart for MESZ2, which is the current micro S&P 500 contract. And this is a 1-minute chart with Heikin Ashi candles. And this is what I'm trading off of. This is pretty much the only thing I'm looking at the entire day when I'm trading. So there's not multiple charts to bounce around from. I'm going to show you a few different charts and why I look at them, but 99% of the time that I'm trading, this is the only thing I'm looking at right here. This is it. You don't need other windows open. You don't need other data. This one chart right here is everything I'm looking at. So here's the 1-minute chart with regular candles. You can see a lot of red and green alternating candles here. This is the same chart with Heikin Ashi. You can see how it just smooths everything out. Very nice, very clean. You can see here on the downside, a lot of red candles. If we look at the regular chart, it's going to be green, red, green, red, green, red. It's bouncing all over the place. So Heikin Ashi candles smooths out the move. You can see how much cleaner it looks on these two pushes right here. So again, you guys can go to Investopedia.com and type in Heikin Ashi, and you can get some information on what those are all about. There's technical description there, and they show you some examples there. So I don't want to spend too much time covering that stuff because you guys can look that up after hours, but understand the main chart I'm looking at is a 1-minute chart with Heikin Ashi candles. That's your starting point. Now what I want you guys to do is go to your platform, and this green line for me right here is an 8 EMA. So I want you guys to add the 8 EMA to your chart. Okay, what I'm giving you guys here is a very basic, very simple, very mechanical, no emotion involved strategy to trade futures. And I'm going to explain, after I get it set up for you guys, I'm going to explain what we're looking at and how it's worked so far over the last 3 weeks of testing. So for now, I want you guys to go to a 1-minute chart. Go to Heikin Ashi candles. And you can even have this on multiple charting platforms. So if you guys have a separate charting platform that you use, you can do that setup over there and then place your trades on TradeStation. So 1-minute candles, Heikin Ashi candles, and this green line is the 8 EMA. Now this red line is the 34 EMA. So I want you guys to go to a 1-minute chart, put Heikin Ashi candles on it, add the 8 EMA, add the 34 EMA, and that's all you need to do. That is how simple this strategy is going to be. So if you guys follow me on Twitter, you'll see when I enter technical analysis trades, there's 1 or 2 lines on my chart. Very simple. I am just an absolute clean chart kind of trader. I don't like a lot of noise. I don't pay attention to news. I don't like headlines coming out. I don't like 55 different indicators. I am a very simple trader. And I wish I had a really cool explanation for that, but the reason is my brain doesn't process tons of complex data. So if I have 8 indicators on my chart, 4 would say buy, 4 would say sell, and I would never place a trade. So I know my personality, and my personality is just keep everything as simple as possible. I've got friends that have a ton of indicators and news sites and this and that, and by the end of the day, they're like, oh man, I only placed 1 trade. And I'm like, wow, there was like 100 opportunities today, and there's just so much information, it's tough for them to narrow down what they should act upon. So I'm just a very simple trader. I like it. It allows me to focus on what I'm doing with 0 distractions. So this is going to be as simple as it gets. You've got 2 indicators, 8 EMA, 34 EMA, and a 1-minute chart. That is all you need to make money using this process. Here's my chart setup. I've got the 1-minute chart regular. I've got the 1-minute chart Heikin Ashi 8 and 34. This is the chart we're going to be trading off of. I've got the 5-minute chart. I've got the 1-hour chart, and I've got the daily chart. Now I'm going to be honest with you guys. When I'm trading, this 1-minute Heikin Ashi chart is pretty much the only thing I look at throughout the day. So I have these other charts, but I really don't use them much throughout the day for what I'm going to show you guys today. So why do I have them? I want to see the daily chart so I can see the overall trend of ES. Okay, we see this nice big uptrend, and then we see this channel in a downtrend, so I can get an idea of where the major support and resistance levels are. If you guys need help with support and resistance, you can go to YouTube and type in 7-Star Traders. That is me. I have a 4.5-hour class on there for support and resistance, so I'm definitely not going to cover that today, but it's something you kind of do need to know as well. So I've got this daily chart here to show me some major support and resistance levels. I've got the 1-hour chart to kind of narrow it down and show me something more recent. And then I've got a 5-minute chart to give me the basic trend that we're in right now. So I've got longer term going down to shorter term to give me an idea of the trend from the top to the bottom. And then once I look at all that, I pretty much just sit on this chart right here and focus on this the whole day. Now I'm going to scroll back so I can show you the whole day. Here's how simple this strategy is. And here's why there's 0 emotion. So if you guys are exiting trades early or you're scared to enter a trade, this is what you guys want to follow for now. And then you can adjust it as you get better with your confidence level or your charting. But this removes all the emotion out of your trading. So when something happens on the chart, you push a button. When something else happens, you push another button. That's it. There's no thought process. There's no analysis. It's as simple as the chart does this, you do that. Now, a lot of new traders have trouble with the mentality of trading. Anyone can learn to push a button, but the psychology is what messes us up, right? Have you guys ever entered a trade and then freaked out, hit the close button, and then 20 minutes later, you're like, oh, I should have held that trade? If that happens, that's because you might be freaking out because maybe you position size and you're staring at the money. Maybe you didn't know where to get in or to get out. So you're kind of guessing. So this strategy takes all the emotion out of it. All you're looking to do. This is as simple as it is. This 8 EMA, the green line, when it crosses the 34 to the downside, you're going to come over here and click sell market. Okay, this is as simple as it's going to be. This 8 EMA crosses the 34 to the downside, we're going to sell market. What that means is we're opening a short position. So as this goes down, we're going to profit. As simple as this strategy is, when this green 8 EMA crosses above the 34, we're going to come over here and buy market. Okay, so we're going to go long or short based on one thing on the chart. If the green crosses the red to the downside, we're shorting the market. If the green crosses the red to the upside, we're going to go long. And you can do the micros or the minis depending on your account balance and your comfort level. The minis, each point that this moves up, so the ask right now is 37.83. If this moves to 37.84, 1 point, the micro contracts will get you a $5 profit. And since we're doing a screen share, you can see how my system just froze. It likes to do that when we have too much software running. Now it's back up. So the ask is 37.83. If it moves to 37.84, 1 point, these micro contracts will give you $5 profit. If you're trading the mini contracts, 1 point on the chart equals $50 of profit. So remember, the ES is expensive. So what they did was they created a lower price contract called the mini, which is going to be basically 1/10 of that. So each point, if you're trading the mini contracts, is worth $50 of profit or loss. So if we were in at 37.83 right here, and it drops to 37.82, you lost $50. On the micro contracts, each point is $5. So again, depending on your account balance and comfort level, you can safely trade the micros where each point is $5. Or if you have some experience and you're comfortable with support and resistance, and maybe you have a bigger account balance, you can trade the minis where each point is $50. Now here's what I'm trying to do with this strategy. I'm looking for 10-point scalps. That's all I need, 10 points. Because remember, 10 points with that micro contract is going to be $50 of profit. 10 points with that mini contract is going to be $500 of profit. If you look at the chart over here, this is 3800, 3805, 3810. So each square here is basically 5 points of movement. So what I'm trying to capture is 2 squares worth of movement. And that's going to change depending on the scale of the chart. You can see I can zoom in and out here. So if I'm just looking for a move from here to here, 10 points, I've been watching this carefully for the last 3 weeks, and you can safely capture 10-point moves 3, 4, 5, 6 times a day. So imagine bringing in $500 profit 3 or 4 times a day. And maybe you make $1,000 a day. Maybe you make $1,500 a day. I don't think anyone here is going to argue with $1,000 a day of profit. That's a pretty good profit level. And that's just a single contract of the mini. If you do 3 contracts, which is basically what I've been doing lately, is 3 contracts for position size looking for 10 points. So that's going to be, depending on if you trade the micros or the minis, $1,500 per trade, or $150 per trade if you're trading the micros. So again, imagine you're making $1,500 per trade and you do that 2 or 3 times a day. You're going to make a very nice income doing this. And 10-point moves on these contracts is not unheard of. Like I said, you can do that 3, 4, 5, 6 times a day. And sometimes I'm not just taking 10 points. I might enter looking for 10 points, but if we have continuation and momentum, you might get 15 or 20 points out of it. And in that case, you might only do 1 trade a day and be happy. If you have a small account and you're trying to build that up with the micros and you get 10 points for a micro contract, that's $50, right? So imagine doing that 3 or 4 times a day, or even twice a day. You're going to build a small account relatively quickly. Now, again, that does require you have the confidence to do this. You have the knowledge to close out a trade when it goes against you, because using this strategy, trades will go against you. The good news is if it goes against you, you're not going to lose a lot of money if you have the discipline to close it when you need to close it. So let's go over some of this real quick to give you an idea of how this works. So here's a nice move pre-market. Okay, I'm on the West Coast, so when you see these numbers here, that is West Coast time. So early in the day, we've got this cross to the upside here. Now, the cross is here at 37.75, but the price of the contracts is up here closer to 37.78. So let's just round that up even more. Let's just say 37.80, right? You see this green line crossing above here, so we're gonna go long. And let's say we didn't get filled until this line up here, which is 37.80. You've got 37.85, 37.90, 37.95, almost 3,800. So there's 15 plus points right there. 15 points in the first move. And then if you take it to the downside here, you're going to get a smaller move. Let's say you filled here at 37.85. Well, you got 5 points there. A little bit more if you held onto it, a little bit less if you close it over here. So that one, let's just say that's a wash. You didn't make any money on that one. Over here, this is when the market opened. And this is the first trade I took for today. The market opened and I went long ES because of this crossover here. So that's around 37.85 right here. I forget my first fill of the day. It was a little less than that. I think it was 37.82 or 37.81. So I saw this move here and I kind of anticipated it happening. Okay, so that's not waiting for confirmation, but I was comfortable doing it because I've been watching this and I kind of thought we'd get a little pop at the opening. So I anticipated this happening. I didn't wait for the actual crossover. And down here, we've got the hiking candles turning from red to green. They started moving up. So I thought once the market opens, we're gonna get a quick pop, which we did. So my entry was a little bit before 37.85. But let's say you waited for the cross to happen and you filled somewhere around 37.85. Well, you've got 5, 10, 15, 20, 25, and a little bit extra. So this second move of the day was 25 points. Remember, if you're trading the micros, each point is $5. So 5 times 25, this move right here represents $125 of profit. So if you have a $1,000 account and you just made 125 bucks, you did pretty good. Don't focus on the dollar amounts and say, well, it's only 125 bucks. Focus on the percentage. If you have a $1,000 account, you just increased your entire account by more than 10%. So this opening move here was for 25 plus points. And then we get the crossover down here. You see the 8 EMA, which is your shorter term moving average, crossing below the 34 EMA. So let's say, here's the cross, but let's say you didn't get filled till down here. So the cross happened here, but the lower portion of that candle is down here. So again, let's just say it's 37.85 when you got filled. Well, you've got 5, 10, 15, 20, and a little bit more here. So an opportunity to make another 20 points. Remember, 20 points times $5 a point. So again, if you have a $1,000 account, this move here, you just made another $100. So between these two moves, if you ignored the pre-market, just between these two moves, you took a $1,000 account to $1,200 in 2 trades with no PDT, so you can continue to trade further the rest of the day. Here's another move. The green 8 EMA crosses above the red 34 EMA. The cross happens here, but let's say you get filled at the top of the candle here. That's a little less than 37.75. So let's make it even worse. Let's just say, even though it filled here, you got filled way up here at 37.75. Well, you've got 5, 10, 15 points here. So just using this crossover here, there's another 15 points. So between this one, 20, this one, 20, this one, 15, you guys can start to see how you can just stack up these quick 10, 15, 20 point trades. And 20 points if you're trading the mini. Remember, that's $50 per point times 20 points. So you guys can grow these accounts pretty good. Again, don't think this is a get rich quick scheme, because if you lose money, you lose it just as quick. Okay, so you want to be comfortable with support and resistance. You want to trade this with one single contract of the micros, which is $5 a point, so that if you lose money, you're not losing thousands of dollars or hundreds of dollars at a time. Now I'm going to give you guys some hints as well here. You don't want your stops too tight, okay? So if we're going to cross to the upside here, and let's say we get filled at 37.70 to 37.75, somewhere in here, you don't want a 5-point stop. Sometimes what will happen is it'll reverse for a candle. If you have a 5-point stop, you'll get stopped out, and then it'll continue on running. So you don't want too tight of a stop. Now, what about exits? The entry is really simple. You guys can see how clear this crossing is. Green crosses red to the downside, we're going to short. Green crosses red to the upside, we're going to go long. Great, but once we're in a trade, how do we exit the trade? That's the hard part of trading, right? You guys can always get into trades, but how do we know when to exit a trade? So there's two ways to exit a trade. There's two things you can look at here that will get you out of a trade pretty safely. And again, sometimes it'll fake you out, but it's a very safe exit. So we're going to take this one here, okay? Let's start with the first one of the day that I showed you guys to the upside. That's pre-market. So the first one for the day is right over here. This is right when the market opened. We take this trade long. Okay, so the 8 EMA crosses the red 34 EMA to the upside. We're going to buy market. We are long here. We're going to stay in this trade as long as these Heikin Ashi candles close above the 8. So you can see if we're in here, we're going to stay in the trade. This red candle wicks below it. Do not freak out. It closed above. This red candle wicked below it. Do not freak out. It closed above. And then we have green, 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 and it runs further. It's starting to turn red. And here you have an indecision candle. That's the long wick to the upside, a long wick to the downside, and the body is very tight. So this is where technical analysis can help you out. If you see this candle and recognize what that means, and then you see red candles, you can close out your trade there. But that requires thought process. And I told you guys there's no thought here. So instead of doing that, if you're good with technical analysis, you can certainly close a trade there and save a few points. But what I'm going to say for you guys that don't want any thought process whatsoever, when it closes below the 8, you can close out your trade. Okay, so when the candle closes below the 8, that's when you can look at closing your trade. Now it's up to you how aggressive you want to be. You can take one candle below the 8, this one closed here, you can close that. You can say, I want a second candle of confirmation and close it here when the second candle closes below the 8. So it depends on what you guys consider confirmation. For me, sometimes I'll get this candle closed below the 8 and I'll wait to see what the next candle does. Because similar to this, let's say this candle did close below the 8, you can see it went on a nice run afterwards. So 8 EMA crosses above the 34 EMA, we are going to long. We are going to stay in this trade as long as these Heikin Ashi candles stay above the 8 EMA. Indecision candle, Heikin goes from green to red. That's when you're going to start looking at, okay, maybe I'm going to prepare to exit the trade. And then when it closes below that candle, you can do so. Let's take this trade over here. The green 8 EMA crosses below the red 34 EMA. We're going to enter a short position. We're going to sell market. So we're shorting it here when the short-term momentum crosses below the medium-term momentum. So we're going to drop, 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 drop. You can see there's no green candle on the Heikin Ashi until you get here. So this whole movement down, you should have zero stress. You should have zero information in your head about, oh my God, do I close? Do I stay in? What do I do? There should be none of that. You entered here on the cross with the 834, every candle is closing below this 8 EMA, you have zero reason to think about closing the trade. Now, these are all red, and this is the first green one. So when that candle closes green, you can start looking at it and saying, okay, I need to prepare to exit the trade. And maybe it bounces off the 8 and continues downward, so you don't have to worry about it. But when you see that first green candle after all these red ones, that's your cue to start paying attention. And you can see just a few candles later, we did in fact close above the 8, so you can close your position there. You can see if you held on to it, it went further down. So that's where you guys that are comfortable with support and resistance can kind of alter the strategy to see where you're going to use your exits based on support and resistance, not necessarily based on the 8 EMA. So again, I'm giving you guys a really simple strategy, and once you're comfortable with it, you can adjust it from there. Now let's take a look at the next setup. Down here, the 8 EMA crosses above the 34 EMA. We're going to come over here and click buy market. So we're in this trade here, red candle, uh-oh, but look, it doesn't close below the 8, so we're staying in the trade. And then you've got this movement up, uh-oh, red candles, it does not close below the 8, so you're going to capture this movement up. This candle here closes below the 8, so you can close out your trade there. So let's say you got the cross here, you fill somewhere up here, you've got a 10-point move between exiting there. So remember, 10 points is 50 bucks profit for the micros, 500 bucks profit for the minis. So this little move right here that took about 20-25 minutes was a profit of $500. If you do 3 contracts, that's 1,500 bucks. Rinse and repeat. Now we have a downside cross here, and I did not take this trade. So I'm going to give you guys a hint about the strategy. This will fake you out sometimes. So if you're new, what you want to do is just take every single cross so you don't decide, is this going to be a fake out or not? You can take every cross, and if you lose a few points here, no big deal because you made a ton of points here, a ton of points here, and if you captured the pre-market trade, you made a ton of points there. So let's say you're up 60 points and you give 5, 6, 7 back here, not a big deal. Okay, here's the reason why I didn't take this one short, even though the 8 did cross below the 34. We're in an uptrend here. So we have a pullback, then a higher high, a pullback, a higher high, and a pullback. So to me, we're still in an uptrend. We had this big drop here and then a reversal here. We didn't get all the way to the top, but we're starting to get an uptrend with higher highs, higher lows. So when we cross to the downside here, I'm not convinced we're going to change direction just yet. And if you look over here, this area here was support, then it became resistance. So I'm thinking, even though it crosses to the downside, there's potential support right here. It was prior support and prior resistance. And if you guys know technical analysis, you know prior resistance can become current support. So even though this crossed to the downside where you can say, okay, that's a good entry, because this support or potential support was right here, and because we're coming out of an uptrend, I skipped taking this one to the downside. Now at first, for you guys that are new, that's probably gonna trip you up a little bit. So again, if you wanna take this trade, I'm not going to be mad at you because you have the 8 crossing the 34 to the downside. The problem is you'll probably fill somewhere down here and it crosses right back above, so you're going to give back probably 6, 7, 8 points. But remember, if you give back 8 points but you've made 35, you're still well ahead of the game. So this is basically what I'm doing throughout the day. I'm okay giving back 6, 7, or 8 points at a time when I'm capturing 15, 20, 30 points at a time. Okay, so you guys shouldn't be scared of losing money on this strategy, because if you enter on this cross right here, you're not holding it way up here hoping it comes back. When you cross back above the 8 EMA, you exit the trade. So you're exiting the trade pretty close to where you entered. So low risk entry means if you're wrong, you have low risk. You're going to lose money, but you're not going to lose a lot because you're exiting really close to where you entered. Now, some people might enter here. The newer traders would do this. It goes way against them and they don't close the trade. And then down here, they're making money and they're going, see, I told you, I just needed to hold on to it. The problem for me with that is if this rockets another 10, 15 points to the upside, you're going to destroy your account, especially if it's a small account. So for me, if I do enter a trade like this to the downside and I get filled down here and it immediately reverses, remember, there's no PDT. You can trade 1,000 times a day if you want to. So just close the wrong trade for 6, 7, 8 points wrong. If it reverses and goes to the downside again, no PDT. You just open another trade in that direction. So there's no thought process here. It's really simple. You wait for these crosses. And I didn't take this one either because this, again, we have higher highs and higher lows. So I wanted to see if that would hold and continue the uptrend. The uptrend didn't continue in this case. And then you got this nice big move to the downside here. So 8 crossing 34. Let's say you took this trade and lost 8 points. And let's say you took this trade and lost another 8 points. You're down 16 points. Well, if you take this trade here, you made those back. Oops, we don't want to do that. Let me get that off the screen. So if you took this trade here, this downward move covered the loss here and covered the loss here. So again, what you guys want to do is make sure you're taking most, if not all of these trades. The ones that I don't take are something like this where I feel like there could be support here. So the risk to reward isn't great. And what happens if this continues down? Nothing. I'm not in the trade. I didn't lose money. I lost out on making some money, but I didn't lose money. And since I'm combining technical analysis with this and the risk reward isn't there, I'm okay that if this continues down, I'm okay missing that move rather than getting in and potentially losing those 8 points because I'm thinking technical analysis wise, this resistance could become support. And in this case, that's exactly what it did. Okay, so if you lost money here, you made it back on this move here. Here's another example, 8 crossing the 34 to the upside, we're going to buy market. And we're looking for 10-point scalps. From this square to this square is 5, 10, 12 and a half. When it closes down here, let me zoom in a little bit. You can see this candle here, it closed below the 8. So you can use that as your exit. And if you do that, you're not making 10 points on this scalp, but you're making 6 or 7. And if you make 6 or 7 a few times a day, these are going to add up. Okay, so let's go to the current moment here. So you can see we're on an upswing here, but the 8 is down here. It hasn't crossed the 34, even though the candle did. So there's no entry for this just yet. And right now, I'm also combining technical analysis. So this is where we can use the 1 hour chart. You can see we're in a chop zone right here. Okay, so this whole 3,800, 3,750, this whole area, it's just bouncing between the two. So you can say maybe we're in a longer term, not even longer term, just on the hourly chart, maybe that's a bull flag forming. So we're in a chop zone here. So you want to be a little more careful with your position sizes. So when I go back to the 1 minute chart, all these little trades here, I'm usually not taking a lot of these in the middle portion of the day because I've made, let me zoom back to today. So I made good trade here. I made a great trade here. I made a great trade there. And I made a great trade there. And I actually did lose a little bit of money on this one. So for the day, I think I'm 5 and 1 on these trades. So now once I've made good money for the day and I know we're in the middle portion of the day and we're in a chop zone, there's no reason for me to trade every single crossover now. I'm going to sit back and wait for the better setup that might come after the lunch break, maybe in the last hour of the day. But there's probably going to be a few trades today that we can take based off this 834 crossover. So since I've made good money for the morning, now I'm just going to sit and wait for the best setup. I'm not going to take every time it crosses. I want the best setup. And since we're in a chop zone right here, I don't view these as the best setups. So 1 minute chart, Heikin Ashi candles, 8 EMA, 34 EMA. When 8 crosses 34, we're going to go long. If it crosses to the downside, we're going to sell short. And our exits are going to be based on crossing below this 8 EMA. Now I'm going to give you guys one more tip, and then I'm going to have Neo come through and show you his charts because he does a few different levels than I do. And again, a lot of times I'll see an entry with this 834 crossover, and he'll find an entry based on how he trades. So we're entering a similar trade based on two different reasons. So I want Neo to come on and show you guys the charting that he looks at and maybe show us a few levels that he uses. So I'm going to give you one more tip and then let him take over so you guys don't have to listen to my voice any further. Here's a second way to exit a trade. Okay, so one way, we're going to get in these trades here, and when it crosses below the 8 EMA, if we're long, we're going to close it. If we're short, when it crosses above the 8 EMA, we're going to close it. Okay, so that's a very mechanical, no thought process closing your trade. If you're short, you need to see a candle close above the 8 or you do not touch that button. If we're long, we need to see a candle close below the 8 or we do not touch that button. So if you guys are finding yourself exiting trades too soon, start with that strategy because it's mechanical, no thought process. If you're long, are you still above the 8? Yes, do not touch that close button. Are you short? Yes. Do not touch that close button until the candles cross above the 8. So again, there's no thought process. You're either above or below the 8. And that's how I want you guys starting off using this strategy. You might not capitalize every move, but you're going to get a very good chunk of them. In other words, with this one here, if you close the trade here, it did reverse and go further down. So you didn't capture the full move, but guess what? As traders, we don't do full moves, right? You're not going to time the top and bottom. What our job is to go in, identify the trend, and capture a piece of that trend. So if you're exiting here because it closed above the 8 and you miss out on 10 points here, that's okay because you grab 10 to 15 on the downside and you're taking a very safe exit. Now here's my other tip. This is the last thing I'm going to give you guys, and then Neo will hopefully come on and show us some of his charting and levels. When we get too far stretched from the 8 EMA, it will pull back. Okay, so you see, let me zoom in so you guys can see clearly. This green line is the 8 EMA. See how the candle's wicked way above here? It pulls back to the 8 EMA. Okay, let's move along to the next trade. Was a long trade from this crossover. We pulled away from the EMA, it pulls back to the 8. We pulled away from the EMA, it pulled back to the 8. We have a downside trade here. You can see here how it pulled away from the EMA and then it goes back. This one didn't quite touch the 8, but it started retracing towards it. You can see here, this candle, we pulled far away from the 8 EMA and then we go back and touch it. On the next trade, we have an upside trade here. You can see we pulled away from the EMA, we go back and touch it. We pulled away from the 8 EMA, we go back and touch it. Over here, we pulled away from the 8 EMA, we go back and touch it. So you can see I'm showing you guys multiple examples. So this isn't a one-time thing. So sometimes I'll take an exit. Let's say you take an entry here. You can see how we pulled so far away from the 8 EMA, and since this level right here is resistance, and that becomes resistance again because the candle can't close there, I might take an exit there instead of waiting for the 8 to cross, or waiting for the candles to cross below the 8. So does that make sense to you guys? The safe entry, or sorry, the safe exit is when it crosses the 8 in the opposite direction of your trade. But sometimes we'll get a pull away from the 8 EMA that I'll exit here. And then if I see that it pulls back to the 8 and holds, you can always get in long again. So on this trade here, we pulled away from the 8 EMA. That might be enough for me to say, you know what? I'm okay with those profits. I'm going to take it here. And then it pulls back to the 8 EMA. If it holds and goes on another leg up, you just get into the trade again. Okay, so we're in a trade long here. We pulled away from the 8, we come back. In this case, it closed below it. So a safe entry is to just get out there. And then it goes right back above so you can get back in. And then this point, we close away from the 8, it pulls back. Okay, so secondary exits, if you want to be safer, is when you get a big move away from that 80 EMA, you can close the trade there. Just understand that it might pull back to the 80 EMA and then go further upside. So you're limiting your opportunity for that second leg up after a pullback. But you can see a lot of times when it pulls away, it does go back to the 80 EMA. So again, I'm comfortable taking that exit there with the understanding that it might pull back a little bit and then go on another run. Okay, so we actually just got a crossover there. So to show you guys, we can come over here and click buy market. Now I don't know how this one's going to do because there's resistance right up here, but I'm okay if I lose a little bit on this one because I've made good money today. So resistance right here. You do have the crossover here. I hit buy market, I am in. This is just a single contract, so I don't care really what happens with it. And if we cross below here, I'll just close it out. Now you can see I have a bracket set up. So when I hit that buy order, it's automatically going to close me out here. I have it set for a 5-point loss, but remember I said before, 5 points is too tight. So when I get in the trade, what I do is immediately adjust it to where I want it to be. Now in this case, since the cross is right here and I'm not willing to lose a lot of money because I've made good gains today, I want to protect that. I'm going to put the stop loss much closer than 5 points. And I don't always recommend taking a really tight stop, but this one, again, I've made good money for today. I want to protect it. There's resistance right above us here. So we're going to need a good push to break above that. So best case scenario, I would only get 3 or 4 points before finding resistance. So again, this isn't a trade I would normally take. We did get the crossover, but I don't like that there's resistance above it. So this isn't a trade I would normally take. I hit the button to show you guys how the setup works and that there's an automatic exit in there. And if I scroll down, there's a 10-point move for the exit to the upside. So I can basically hit that buy button and then walk away. And the next thing I'm going to hear is order filled. And then I just check if it filled to the downside or to the upside. So in this one, I'm actually probably anticipating it to fill to the downside for a, in this case, it would be a 3-point loss. This is the micro, so I lose 15 bucks if this order fills to the downside. Remember, I don't like this crossover to the upside here, and you're going to see it fill the order right there. So the reason I didn't like that cross to the upside again is because resistance was right here. So there wasn't a lot of room between the entry here and resistance. So that's not a trade I would normally take. I hit the button so you guys can see exactly how it works. And then if we trade to the downside, again, there's some support right down here. So if we cross to the downside, it's not necessarily a trade I'm going to take there either because, again, we're just sitting in a chop zone. So Neo, if you're ready, if you want to pull up your chart, I will hand this off to you and you can show some levels that you watch for ES. Are you ready to take over?
Sir. I'm ready whenever you are, sir.
All right, on your screen should be the option to take over. Neo trades futures as well. So he's going to show you the levels that he uses in his chart setup, which is slightly different from mine.
Trying to figure out which screen's mine, which one I want to share.
And after that section, we'll do a Q&A session. So if you guys have questions, I see a lot of questions coming through that I haven't looked at and answered. So we will go back and answer all of those for you after Neo's portion.
Okay, let's figure out which screen this is. Hello, everyone. I want to try this one. I don't know if this is my screen, if this is the one what's showing up on there.
That shows Amazon, Tesla, NQ, Apple, SPY, QQQ.
Well, here, let me, okay.
There's a drop-down menu. You can choose which screen you want to show.
There we go. There we go. All right. How's everyone doing? Hope you're all doing good. Mike and I trade a little bit different. I use a lot of the orb strategies that we teach the new members in Black Box Stocks, the start room, BBS start room. And I use 1 minute chart, 3 minute chart, and others. I'll go ahead and maximize this so you guys don't get confused. Okay. I have an 834, just like Mike. And the overhead resistance you're talking about, Mike, was at 377. This is what I use to trade futures. Right here in this shaded area, you have the orb, the 15-minute orb, which is the opening range breakout that we use, that we teach members how to trade off of. I would have entered if I was trading. I was just listening to Mike over here at the bottom orb breakout with a 5-point stop on MES. Pretty easy. It's just as well as his 834 cross on a 1 minute. This is a 1 minute also. I normally have a 3 minute up instead. I'll switch it to a 3 minute and I'll show you why. Okay. And then right there you see we were hitting VWAP right there and rejecting it earlier. Not really sure. Mike really covered it all. I use 834, 89, 200. It helps me stay in. I like to do, if I'm doing MES with the newer traders, I like to do 5-point stops on smaller accounts. You can make good money doing this, but a lot of people are under the decision they think it's a get rich quick scheme. It's not. You can treat it like trading SPY. It helps you out a lot. It's kind of like a no stress trade for me because there's no time decay with with options. If you have a decent size enough account, you can buy it and let it run around a little bit before. It's pretty simple to do. I mean, there's times when the volatility is pretty strong and you'll get all those whack candles, but that's why I like to tell people to start with a bracket. You set up your bracket for your stop loss. You can easily drag your stop loss up and down on the Domin, depending on which brokerage you're using. If you're using Tradevate or TradeStation, which we recommend because it's cheaper, and it helps you a lot. So I don't know if you want to add anything to that, Mike, but it's pretty simple.
No, why don't you pull out to a longer time frame and maybe show some support and resistance levels that we might be looking at?
Okay, restore this and go to the 15 minute. So I like to use the 15 minute for support and resistance levels. Here I have the same thing, except I don't have the orb on it because on a 15 minute, the orb would just be a little different. But right here, I also have the linear regression trend lines on here. As far as on the 15 minute right now, we have that resistance up here at 37.89 area. And when you go back farther to this morning, that low right here, which is the bottom VWAP, which everyone has VWAP on their charts. Right here, my teal line is my 8, and the yellow line I have here is the 34, which we keep hitting our head, which is right below VWAP right now. What else would you like me to talk about, Mike? We'll go back to the orb.
Yeah, I'm trying to find how I can share the link with everyone here. So give me a second to try and get so if you guys want to start a TradeStation account, we have a link you can use that automatically gets you the lowered commission rates. I'm trying to see how I can post that for everyone. So if you can just hang on to the screen for a little bit while I find that.
Okay, it's not a problem here. Three minute right here on the 3 minute, we have it empty wick in the 8-day SM, or actually EMAs. I switched over to EMAs about a month ago again because of the way the market was moving, 37.78.21. And then when you switch it to a 1 minute, it does look different. It just all depends on your trading style. Mike likes to get in quick and get out. I will sometimes enter on a 1 minute chart and then I will go to a 15 minute chart. And if I'm long, I like to see it stay above the 8 moving average. If I'm short, I like to see it stay below. 15 minute chart will give you more of a trend than a 1 minute. I will say that, especially when you're zooming out and looking back. You can pretty much see all the way to open if you back out enough. And it gets a little crazier. Right up here is what we have as our upper orb, and then we have our lower orb. So if you were here at the open, you could have shorted that rejection of the upper orb and wrote it down. Right now, it looks like we're breaking the bottom orb with the 8 trending down on the 1 minute chart. And then I would be looking to see if we made a new lower low right here at 37.75.26. That would be a new lower low to me. That was at 12:53, so about 7 minutes ago.
All right, if you guys look in the question box, I answered a specific question with the link. So see if you guys can all see that answer. I don't know how it works on those question box for you guys. I don't know what your view looks like. So if you click on that link, it says BBS Futures open account link. That link will automatically apply the lower margin and the lower commission rate for you guys. So if you click that link, it'll go to a TradeStation account setup. If you sign up from there, it automatically links you to that discount. So there's nothing further you guys should need to do. You guys will have 25-cent commissions, which is the best you can probably find. So if you're looking to open a futures account, go ahead and click that link and you're automatically set up for the discounted commissions and the lower margin requirements. So let's talk about two things really quick before we go into a Q&A session. On the screen from me, actually, let's see if I can. See if I can get this back here. Okay, that should be it. So on the screen here, you guys can see I've got ES and MES, which on this one is the micro account. On TradeStation, I actually have it set up where I've got the micro and the mini next to each other side by side. So depending on the confidence of the setup, I can click micros or minis depending on how much risk I want to take and what size position. Right next to that, I've got the NQ. So this one is basically trading the NASDAQ in the same way that this one is trading the S&P 500. So for NQ, let's go to a 1-minute chart, same setup. NQ, each point that this moves is going to be worth $2 for the micro contracts, whereas ES, each point for the micros is $5. So there's a different tick value for these. So each time this moves each time this moves 1 point, the profit or loss is $2. Now NQ can move a lot faster. You can see in this case, each of these squares here from one level to the next is 20 points. So that's going to be $40 of profit or loss for each one of these squares that these candles cover. So NQ can basically profit more, or your losses can be more a lot quicker. So I like the NQ because it's going to move quick and you can make even more or lose more with this one than ES. But in choppy conditions, I'll go back to the ES because it does move slower. So it's a little bit safer. So I want you guys, if you're just starting out, stick to the ES. It's a higher tick value, meaning each point is going to be worth more, or you're going to lose more than NQ, but it's going to move slower. So on a trade here where you might make, let's say, $50 profit on ES, you might make 75 to 100 if you were trading the same movement on NQ. So it's going to move quicker. That's why I recommend starting with ES, because it's a bigger dollar amount per move, but it's going to move slower. So I feel like it's a little bit safer for you guys to start out with that. And now I'm going to scroll up and see if I can find some questions from you guys, because I haven't been able to follow that while I'm talking. There's a few questions on margin. How much do you need to trade? So that's actually going to change from broker to broker. So depending on where you have your account set up, you need to go to your broker frequently asked questions and find out what the margin requirements are, because they are a little different for each of them. With our TradeStation link, you guys have discounted commissions and lower margins. Some of them can be extreme. I think TOS, you need quite a bit of money in your account to trade. With TradeStation, you won't need quite as much, so you can do this with smaller accounts. Do you hold contracts overnight? So I do not. I am day trading these. I do not swing. Neo does swing. So again, it just depends on your trade style. your risk tolerance, what you're looking to do out of these. I don't swing futures contracts, but you certainly could if you have a trade style that basically is designed around swinging. There's no reason why you couldn't. I just personally don't. I'm more of a day trader and a scalper. Do you have a Discord group for futures traders? We don't. If you hang out with us, actually there is on Discord, but Neo and I are over in Black Box Start. So if you go over to the Start channel, we talk about different levels there, and we'll talk about I'm going long, I'm going short. So here's an example where the green crossed red to the downside, and you can see we have a little bit of a push here. So that could have been a good trade there. But again, we're coming out of the lunchtime and we're in some chop here. So maybe you guys skip a little bit of this. Maybe you took that one, and if so, you're doing pretty well there. Just trying to watch a few things at once here. How many points do you give a stop loss? For me, it's more based on support and resistance and a combination of where I get in here. So let's say you're in a downside trade here and the hiking goes from red to green and you want to trade somewhere in here. My stop would be below this level of prior support. That's not the strategy I'm teaching today though. So again, it kind of depends on your entry. If you're taking this crossover to the upside here, the stop would be if the 8 crosses below. Okay, so we're taking an entry based on the green crossing above the red, so we're going to go long. The 8 closing below that level would be where you exit out. How do you sell? So if I hit buy market, I am long, and then this button here says exit at market and cancel. So what this is going to do is exit my position and cancel any other open positions. So with the bracket, if I have it set for a stop loss and a profit target exit, when I hit this button here, exit at market and cancel, it's going to exit the current trade that I'm in and close any other trade that's open. So any other bracket to the other direction will be closed as well. Otherwise, if you're in buy market, you can close it by selling. So nice and simple. One button gets you in, one gets you out. Do you have this chart set up in TradingView? I don't, because I don't use TradingView. You guys might see me post in the start room charts for TradingView. So I actually use it as a backup if I want to grab a quick chart, but I don't trade off of TradingView. I don't look at it much throughout the day. It's just where I grab screenshots from. So I don't have anything set for TradingView.
It shouldn't be too hard to set up for TradingView because it's just the 8 and the 34.
Yeah, any platform can set it up. You're basically going to find 2 EMAs, change one to 8, change one to 34. And if you can, put Heiken Ashi candles on there under candle type, and that's all the setup is. And use it on a 1-minute chart. If you get shaken out of a 1-minute chart, I suppose you could use a 3 or 5 minute, but for me, again, I'm looking for those quick 10-point scalps. I want to grab that $500 at a time. And if I'm doing 3 contracts, that's $1,500. So I'm not going to try and do that on a 5-minute chart. I can do that on a 1-minute chart a few times a day. Get in, get out, grab 10 points here, 10 points there, and just stack up those 10-point moves. So for me, it makes more sense to do it on a 1-minute chart so I can get those better, quicker moves. On a longer term chart, you might have to stay in the trade a little bit longer for the setup to play out. Will this work on common stocks? It will. You can use the same strategy for options, for commons. You wouldn't necessarily want to do it on the options contract chain, but if you're doing this strategy here, let's say this chart was Apple. When it crosses to the downside here, you can short common shares of Apple, or you can find an at the money put for Apple and trade it to the downside. So you can definitely use this. What this is doing is basically just showing momentum shift. So the 8 is a shorter term momentum. The red one, the 34 EMA, is a little bit of a longer term momentum. So what we're doing is watching for the shorter term momentum to increase above or below the longer term. And that's going to give you an indication that the momentum is shifting to a different direction. And then if we get any follow through, you can get some nice movement here. So we're basically just watching the momentum shift with these 2 EMAs. Why Heiken versus regular? So it smooths everything out. This is the Heiken. This is the regular. So you see a bunch of green and red, green and red, green and red, green and red, green and red. It's all over the place. If you use the Heiken, you can see it just smooths it out. So this whole move right here is a pretty nice smooth move. This one here, pretty smooth. If we look at that on the 1 minute regular chart, you've got all these candles just changing direction every other candle. So the Heiken just makes it smoother, easier to stay in the direction of the trade because you're not freaking out over every individual candle. You're taking the overall trend and smoothing it out. So the Heiken is just going to be a cleaner look to help you stay in the trade longer.
A lot of people were asking before, if you're, the way to look at MES and ES is MES is like looking at a SPY 50 delta with no time decay. ES is like looking at a SPY contract with a 500 delta with no time decay. That's why I like to tell people to start with MES to get their, get your confidence up, or because a lot of people are scared to trade ES or MES. But if you start with MES and work your way up, start with one contract. You can let it, if you have a decent size account, you can set your stop anywhere from 5 to 15 points. You'll know you're in the wrong trade. If you're below 8, 9 points down, sometimes you know you're wrong. You just stop out. There's nothing wrong with stopping out. That doesn't mean it's a bad trade. It's still a good trade because you followed your plan. You could always get back in with futures. There's always a trade.
Yeah, remember there's no PDT. So if you're in the wrong trade and you close it and it reverses, you just get right back in it. There's no PDT to worry about as far as, well, if I exit a trade here, I can't trade again till tomorrow. You can trade all day long like this. This is super helpful. I've been trading MES for the past month or so, but this makes it more simple. Thank you. Yeah, simple is the way I basically trade. I can't process complex data. So my trading is simple just because that's the only way I'd be successful at it. So this is definitely an easy way to trade, taking the emotion out of it, because again, it either crosses above or it doesn't. And if it does, you stay in the trade until the candle crosses below. So there's no thought process, right? Even if you get shaken out, like the demo trade I did, right? We got in here because it crossed up. It couldn't break above this resistance. It closed below, so we closed out of the trade. No big deal. And then if you take this trade here, you're probably covering the loss that we took on the previous one. And you can see it's kind of consolidating here. Let me zoom in a little bit. It's consolidating here and we're close. It didn't close, but we're crossing above the 8. So this is where you would take an exit, or you can wait till see if this closes above. So if you got in on the cross here, you made a few points down here, you're giving a little bit back over here. This trade would have covered the loss you took on this one. So it's a really simple strategy. Again, there's no thought process. If you want to take the simple way, this candle is above the 8, so now you can close it out. You don't have to think about, should I close or should I not, right? Is the candle above or below the 8 in the opposite direction? If it is, close the trade. If it isn't, stay in the trade. It's as simple as can be.
Another good thing about futures trading is each brokerage will offer you a demo account. So you don't have to just jump in and risk your money right away. TradeStation has it. I mean, Toss even has a paper trading account for futures. It also helps you learn the platform. And I would suggest doing that for a couple of days, especially like we see a lot of people say, I made my quota for the day, I'm done. Okay, log into your paper trading account on futures and practice, learn the platform, get comfortable with it. That way, when the time comes and you decide you are going to trade futures, you don't just jump in, guns blazing and lose money.
And what's cool about this is for a lot of you guys that only want to work a few hours a day, most of my profits trading this strategy are coming in the first hour and a half to 2 hours of the day. And then technically I could stop trading, make decent amount of money in the first, 3 or 4 moves of the day using the strategy, that the rest of the day, like I said, on the moves like this, the small ones, I'm usually not taking these, because we're in a chop zone here. So I might not take this one even though it ended up paying out. I might not take this one even though, well, that one probably didn't pay out very well. So once I make, let's scroll back out. This is the pre-market trade here. That was nice. This one was nice to the downside. This is when the market opened. So I had a nice trade in the morning, a nice trade in the morning, a nice trade in the morning. And then I'm kind of sitting back waiting for a good setup. And then when I see some bounce like this, with the trade that I showed you guys, I took a quick loss on that one. So after that, I might just say, you know what, I'm going to wait for some solid support and resistance instead of waiting for just the crossover. And I'm going to combine support and resistance with the crossover. or I might just be done for the day. You know, you make 30, 40, 50 points in the morning, there's no reason to keep trading later on. So I'm still going to watch the chart throughout the whole day, and I'll take another entry if I find what I like. But if you only want to trade a few hours, you get, and again, this is just historically going back 2 to 3 weeks. I don't normally trade crossover strategies. That's just not my thing. But since I started doing the futures, that's just one of the things I started looking at and adding it to it. And again, I found such a simple strategy that's just no thought process, no emotion. So I've started playing with that for about 2.5 to 3 weeks or so, and it's working out really well. So that's where I'm starting with you guys. And again, you can take the strategy, start with it, and then adjust it based on, you know, your experience with it, and based on your experience with technical analysis. You can combine all of that. Next question is, during which hours of the day is future trading more productive? There isn't really a time of day where some trading is better than the others. You've heard our jingle, don't trade at lunch. So the volume dries up at lunch, so you might get smaller moves. I'm finding that the mornings are pretty profitable doing this particular strategy, but that doesn't mean that in the afternoon you won't make money. So I do like the mornings, but I wouldn't say the mornings are the only times you really need to focus on it, because you can make some really good moves at the end of the day as well. Next question, what is MES? So MES is going to be the micro for S&P 500. So you've got the micro, which is the $5 profit or loss per point. You've got the mini, which is $50 profit or loss per point. So MES is just the micro contract for the S&P 500. So if you guys are trading and new to futures, trade those micros until you get used to it, because you can afford to lose maybe 50 bucks, 60 bucks out of, let's say you have a $1,000 account. You can afford to lose 50 bucks once or twice. You don't want to make a habit of it, but if you're trading the 50 bucks per point and it goes against you 6 points, you kind of just blew up your account. So MES is just going to be the micro contract for the S&P. And same thing over here for NQ, we've got the MNQ, which is going to be the micro contract for there. The TradeStation setup that I have has the micro and the mini right next to it with the chart on the side as well. So it's easier to decide which one you want to trade that way. On Tradovate, I kind of have to flip through a bunch of things, so I don't like it as much as TradeStation. It's easier to do on TradeStation. Can this be done on Thinkorswim? It can be done on any futures platform. It's just a matter of how easy it is and what commissions and margin requirements. So Thinkorswim, you can do it, but you have a lot higher commissions and margin requirements. So if you use that link for TradeStation, you're paying 25-cent commissions. I think on Thinkorswim, it was like $3 or $3.25 or something ridiculous. So you can do it, you're just gonna be paying a lot more to do so. Neo, do you use the fib on the daily with or without extended hours?
I always have extended hours on because it's the futures. It runs 23 hours a day. So I always keep extended hours on ES and NQ. Like right now, we just lost the 618 fib, which was 37.67.
Okay, there's a bunch of you guys saying you are able to copy and paste the link. Awesome job. So again, if you use that link to sign up, you're automatically getting the discounted margins and commission. So there's nothing further to do. Just go ahead and open the account following that link. There's nothing further to do. You've got some incredible commissions. Again, I forget what Thinkorswim is or E-Trade or anything. You guys can go to their websites and just look up commissions for futures. And some of them are pretty bad. So 25 cents is a smoking deal.
Yeah, I think TOS is $5 in and $5 out.
Can I trade $1,000 cash account? So you can trade $1,000, but it's not a cash account. So the thing with futures is that it will be a margin account. And that's why you can exit a trade and enter another one right away. So they're cash settled, meaning you don't have to wait the next day for your trade to settle, and it's immediate. So if I close a trade right now, I can use the same dollar amount that I just closed to enter a new trade. So futures accounts are margin accounts. How long does the commission rate last if you use that link? So that will be your rate. As far as I know, that is a permanent rate that was negotiated for us specifically to have a well, I can't say lifetime, but that's basically the rate for us. It doesn't expire. $8 and $34 are EMAs. Honestly, you can probably use simple as well. I just use EMAs because that's the first thing I popped on there, and that's kind of what I'm used to using. If you use the EMA or the regular simple MA, it's probably not that much different. Is ES $5 a point or MES? So MES is going to be $5 a point. The ES will be $50 a point. So the MES is the micro, and then you can do the minis, which are going to be the $50. So MES is the micro contracts, and that will be $5 per point. So again, if you're looking for a 10-point move up or down, that's going to be $50 profit or loss with the micro contracts. And that's a great way to build those smaller accounts. Or if you're new to futures and don't want to risk a lot of money, use those micro accounts. MES is the current month micro, and that is $5 a point up or down. Is there a paper trade account in TradeStation? I believe there is. I don't use paper accounts, so I don't know for sure, but I know a bunch of people do have paper accounts that you can use to try this out.
TradeStation does have a demo account for futures. A couple of the BBS Start members are using it.
Perfect, nice. What's the difference for trading futures on TOS, TradeStation, or Tradeovate? So the main difference is your margin requirements and your fees. So TradeStation has lower margin requirements and the best fees. TOS is going to be very expensive to do so. Remember, if you're doing 15 or 20 trades a day, the difference between 25 cents and $1.25 is going to add up big time. And then it's just a matter of the chart setup. So on TradeStation, I don't use TOS for anything other than charting at this point, so I don't know what it looks like. But for TradeStation, my setup is to have ES, MES, and the chart all next to each other. So it's one screen that has everything I want. So there's literally no clicking back and forth, right? If I want to trade the micro or the mini, it's right there and it's right next to the chart. So I don't have to go from the chart to the contracts. Everything's one screen right in front of me. So really clean setup. I'm sure the others are as well. I doubt it would be too complex, but so the main difference is that we have much better rates and lower margin requirements. What is the how did you hear about us answer on TradeStation, rep, other, or educational partner? You can probably, I don't know if we're an educational partner or a rep, probably not rep. You can probably just put other and just list Blackbox so they understand where we're coming from. We're trying to do some good things with them and they gave us a discounted rate. So as long as they see that, oh, hey, we're pushing a few guys to open accounts there, they'll be happy with us and make sure we can do discounted rates and stuff like that in the future as well. Are you using TradeStation now? So I see Neo answered that one. So on the screen is Tradeovate. The only reason I'm not showing you the TradeStation account is because if I pull that on the screen, it shows my account number in 3 different spots. And as far as I know, there isn't a way on TOS, you can use a privacy mode, so it blocks out your account number. On TradeStation, I don't see where you can do that. So I use TradeStation, I'm just not showing it to you guys because my account number would be visible. Do you have add 2 positions or scale out? So for me personally, my main strategy is to get 3 contracts and sell 3 contracts. A smarter way to do that would be to get the 3 that I want and then scale out 1 and then 2 and then 3. But I'm the kind of guy that when I want to get out of a position, I just get out of the position. So I don't want to worry about, should I sell half? Should I keep some? Should I keep 1 and let 1 ride? But by doing so, you might find greater profits than the way I do it. So again, it's just a comfort level. See if that's something you're comfortable with. For me, I've been looking for, again, since I'm kind of new to working out this strategy, I'm just doing 3 contracts looking for 10 points and then trying to do that 3 or 4 times a day. As simple as can be. So 3 contracts in, 3 contracts out. I'm not worried about scaling. With 3 contracts, I don't know if I'd really scale anyway. Larger position size, it's easier to do that, but you certainly could scale 3 contracts and do 1 at a time. So that's just your personal trade preference. Is the bracket automatically set up or do we have to do that? You have to do that. So you can set it up so that once you press that buy button, you're in a position, it will automatically close you out with profit or loss at certain levels. I don't really like to use the brackets. I use them if I'm trading futures after the regular market session because it moves slower. So if I see a setup I like, but I don't want to sit in front of the computer for an hour and a half to watch it move 3 points, I might enter and then just have the bracket set and walk away. And then once I walk away, all I'm going to listen for is order filled, and then I just come back to see if it filled to the up or downside. So I like brackets for after hours trading because it moves slower, but during the market hours, I don't like them so much because I'm watching the chart live anyway. How much money do I need in TradeStation? So it depends on the margin requirements and what you want to trade. If you want to trade the micros or the minis, you can open a $2,500 account. You can open 10,000 if you want. I think, I don't remember what I started with at TradeStation, but it wasn't a lot. So you guys, you don't need to do like $50,000 accounts to do this. You can start with 2,500 and build that continually and very nicely. And then eventually you can do the micros going into the minis. And then once you're starting to trade the minis comfortably and consistently, then you can add more contracts at a time. So again, you don't need a lot of money to do this. You need some, and you don't want to risk money that you can't afford to lose.
Yeah, I would say
Just
anything
like any other trading,
$1,000,
right?
$1,000 or less. I would practice on MES because if you're hitting your trades right, you can still build that account pretty quickly. You got to think the moves we're getting right now in ES 10, 15 points at a time. So, I mean, and then eventually you'll start trading more than 1 MES contract. You might move up to 2 MES, which bumps you up to $10 a point. So, I mean, anything $1,000 or less, I would suggest MES with your stop set at least.
Yeah, and think about that. If you have a $1,000 account and you're grabbing 10 points, you just made, $50 on a $1,000 account. So you might look at it and say, oh, it's just $50, but compared to the $1,000 account you're starting with, it's a pretty good percentage of your account. You're not going to get rich making $50 a day, but you can grow a $1,000 account to 10,000, 15, 20, and then you can start sizing up. And then again, I don't want it to sound like it's very easy to do this and you can just get rich overnight because you can lose money just as quick as you can make it. So you guys do want to be careful. Don't just go wild, wild west, gung-ho. I'm going to buy 10 contracts of the most expensive thing. So we're talking about trading the S&P 500 and the NASDAQ. So Neo, talk to these guys about oil and why that would be dangerous to trade oil for new traders. Here's what you guys want to be careful about with futures. What's the tick value for oil?
Oil is, yeah, I wouldn't even be, they don't even let me call my oil trades out. Okay, oil has 100 ticks. It's $10 a tick. But oil also means you need money. It's $14,000 a contract, depending on which brokerage you have. So stay away from oil for a while. I mean,
so you guys, it's one of those things
stay
where
away from it.
you want to start small, you want to have your discipline. You don't want to get one contract that goes against you, you add another one that goes against you, you add 10 trying to make it back. Remember, this is a margin account. So if you have a $1,000 account and somehow these trades get away from you, you can basically get in some trouble. So you definitely want your discipline. Does E-Trade let you trade futures? I'm pretty sure it does.
E-Trade Pro.
Futures account with E-Trade. I've got Tradovate that you see on the screen and then TradeStation. I do use E-Trade for options, but not for futures.
You have to have E-Trade Pro.
E-Trade Pro, perfect. Where do you see the bid price for one contract? So right here on this screen, you see the bid and the ask. And you can see the spread is 25 cents. So I'm just doing buy market and sell market. There's no reason to put in a limit order. If I see the crossover and I want to get in, boom, hit buy market and I'm in the trade. So the spread is quick. It doesn't move that fast on you. So again, it's not like trading Tesla where you have to worry about a 60-cent spread. So another benefit of futures over options. It can widen up. I've seen it widen a little bit, but it just generally doesn't really have a spread on it. What's the average number of trades lately? So using just the futures and just this strategy, I'm probably doing 6 a day on average, losing 1 to 2 out of those 6. So overall, by the end of the day, net green.
I'll do 1 to 3 trades a day. It depends.
What's the worst that could happen? As long as you exit out, you're good, right? Yes. So the worst that could happen is you're in a trade, you don't manage it, and you start losing more money than you have in the account, and then you have to put money in. That is called a margin call. That's when they call you and say, hey, you screwed up, you owe us money. So if you exit your trade for a loss, that's it. You're out of the trade. It's a little different from options because, again, these are margin accounts. So if I buy a $250 options contract and it goes to 0, I lost 250 bucks. If I'm in a futures trade and I'm not paying attention to it, I can lose a lot more than that. So as long as you're hitting that buy and sell button and not leaving trades open, hoping something happens, you're fine. If you leave a trade open, hoping something happens, that's when you're going to get into some trouble. So again, I'm stressing, like, you guys need discipline to do this. You need discipline for all types of trading. The good thing about options, though, like I said, you can buy a $250 contract, and worst case scenario is you lose 250 bucks, right? With a futures trade that gets out of hand, you're going to lose a lot more than that. So you want to be careful. You want discipline to exit a trade when you should, or when the chart tells you you should. Does TradeStation have the same guide where each box is 1 point? So that's just the scaling on the chart. Like if I scale in and out, you can see it changes. Each box here is worth 5 points. If I scale in closer, each box is 2 points. So that's just the scaling on the chart. You can set that depending on your zoom. I've been trading on the sim account and I like it. EMA 8 and 34 strategy makes it easier to make decisions. Thank you. Already have an account on TradeStation. Do I still get a discount? Yes. So if you already have an account, we're just going to call them up and make sure they say, hey, I'm a Black Box member. Can I get the Black Box discount? Sometimes the person you're talking to doesn't know there's a specific code that they have to put in. So if you get someone on TradeStation that doesn't understand, just call back another time and see if someone else can get that for you. Until they get that message down to the whole sales team, there might be a few people that don't know, but you do get that if you already have an account. Just call them up and let them know you want the Black Box rates. What are your settings on the squeeze indicator? Whatever the settings happen to be on it. I don't mess with that. It's just on there. I actually don't really look at that. So whatever the standard settings are, that's just what's on there. How do we set up the brackets? So on this one, you can come down here to the brackets, and if you click on this, you can set up how much you want it up or down. So on this one, you can turn brackets off, number of ticks. The type is target, profit, and stop loss, or they say take profit. So I have it set for 40 ticks up, which is going to be 10 points. Stop loss is 20 points or 20 ticks down. And then if you click on save and make sure they're on, anytime I click buy or sell, it's automatically going to put the upper and lower stops on that trade as well. So I don't have to really exit the trade. The system will do it for me in either direction. BSZ2 is the mini. So yes. So the Z is just referring to the month of the contract. So you know how in options you can trade this week, next week, 2 weeks out, 3 weeks out, 6 weeks out. For futures, you're just trading like a monthly contract, and you trade that same contract for like a few weeks until you switch over to the next one. So the Z is just referring to the current month contract. So MESZ2 is the micro for the S&P 500, and the Z2 is just referring to the current, like the front month contract. What hours can you trade futures? So they close for about an hour, I think, or 2 hours for maintenance, and then they open back up and you can trade the whole rest of the day. So you're down after the market closes. I think you have an hour to keep trading them, and then it closes for 2, and then they open right back up.
Yeah, but be careful trading that last hour. A lot of brokers will increase your margin by 30% for a contract. So let's say if Tradevate was charging you $55 for an MES contract, they move it up even higher. I think they move it up to 1,000 because it's that last hour. So a lot of people don't even trade that last hour. And if you don't have the amount of money in your account, it'll just reject your order.
Okay, there's a comment on here. My TOS shows a commission of $2.25 and a fee of 32 cents. So they're paying a total of over $2.50, and with TradeStation, you're paying 25 cents. So that will add up big time. So you guys want to be careful with those other accounts and their commissions and fees combined. A $2.25 difference will eat into your profits. So again, TradeStation has 25 cents for us. A lot of these are repeated questions, so if I don't ask or answer your specific question, it's because it's pretty similar to something else. A lot of people are asking if there's simulated accounts. There are on multiple platforms. Do you suggest futures over options? So right now I'm doing futures over options because the options flow that I want to see isn't here. I'm still trading options based on technical levels on the chart, but for options flow, I'm not seeing a lot of the type of flow that I want. So since that part slowed down, I'm trading options based on technical analysis, but I'm trading futures to replace the options flow that I used to trade. And then as soon as options flow comes back, hitting us hard and heavy, I'll go right back to trading that. We're just not seeing as much of the right type of flow as we used to. So futures for me are just replacing that for the current moment.
And when we do get that flow back, you can use flow to trade futures. I'll start showing how, because we've done it before in BBS Start. There was a bunch of Microsoft flow one time, and I followed with an MES contract and followed that flow with MES, and it worked out. Because Microsoft is 10% or 6% of the ES, and it's 10% of the NQ. So you can use black box flow to trade futures.
So there's someone saying MES doesn't show anything in the TradeStation platform. So make sure you're approved for futures. I don't know if that will stop you from seeing it, but on TradeStation, I think you have to type in @MES, the @ sign. Sometimes, like the different platforms show it differently. Sometimes it's the @, sometimes it's the dollar symbol, sometimes it's a dot. So depending on your platform, you have to type in something else. So for TradeStation, it's @ sign, @MES, that'll bring those up for you. When things normalize, we won't get these 10-point moves, correct? Hard to say, but 10 points right now is very easy to come by. So don't worry about when things normalize, take advantage of it since it's here right now. I do hope these 10-point moves come, 3 or 4 times a day, every day. That would be awesome because again, you're just kind of stacking points throughout the day, and it's been very fun to do so. So I hope it sticks around.
Yeah,
Do you ever find issues with liquidity or getting filled overnight? Oh, Neo answered that one. Overnight, no issues with that, but it will trade a little bit slower because there aren't as many people trading overnight. Yes, all oil also settles with a tanker at the port. So there's a joke amongst some futures traders that if you're trading like orange juice or soybeans or whatever, those are physical delivery. So if you
And
don't
no,
close
yeah,
out a trade, you can have 20,000 pounds of coffee beans on your doorstep.
yeah. One
But with
contract of oil, by the way, is 1,000 barrels of oil.
yeah,
So
don't
just
take
keep that in
delivery.
mind.
How do you get the Heiken Ashi on TradeStation? So that's a downside to TradeStation, is I don't think you can without searching and paying for it. I actually don't have the setup on TradeStation. So the chart on TradeStation is the regular candles, but I've got the Tradovate Heiken Ashi set up on a monitor right in front of me. So I'm kind of watching the Tradovate screen and executing on TradeStation. That was the problem when I first got there. I was trying to look for the Heiken Ashi and it wasn't there. What does the 8 and 34 EMA mean? So what you're doing is taking 8 periods of a moving average or 34 periods. So for the 8 EMA, you're basically taking the last 8 periods of your candles and averaging that out. For the 34, you're taking the last 34 and averaging that out. So the 8 is basically a short-term momentum, and the 34 is going to be short-term as well, but obviously longer term than the 8. So what we're doing with this strategy is basically watching for that short-term momentum to turn into, or basically to switch direction with the longer term. And that's going to give us an indication that the chart is changing to the other direction. Then you just want to see continuation or momentum come through to pull it further in that direction. There's a few people that said they opened an account using the link. Awesome. Welcome to the dark side. Welcome to futures trading. And again, if you guys have questions on this, hang out with us in the Black Box Start Room. Neo and I are kind of bouncing levels off there from time to time, what we're looking at. So Tradovate fees are, I believe, also 25 cents. That's their standard. You don't have to negotiate that one. The main difference between the platforms are going to be the fees and commissions and whatnot and the margin requirements. So Tradovate, I believe, is 25 or it might be 50 cents. I forget what Tradovate is, but it's pretty low as well.
They're both good platforms. The good thing about TradeStation is you don't know Tradovate, you can't trade options. TradeStation, you can switch back and forth from options to futures.
Ooh, here's a good point. Yeah, so someone's saying you need to pay for data. So on Tradovate, you would have to pay monthly for live data. If you're on TradeStation, you don't. So that's another benefit to TradeStation, is that they will offer the live data for free. Tradovate, I think the package that I have on here is $9 a month, so it's not going to, put you in the deep red trying to recover for the data fees. So it's not super expensive, but Tradovate, $9 a month for the basic fees. TradeStation, free live data. Regarding the MA 34 versus quicker 26 or 21, I just use the 8 and 34 for this strategy, but certainly feel free to adjust it and see if you like something that works better for you. For me, these are just the two that I like as far as finding what I'm trying to do with this particular setup. You can get something that obviously moves quicker or slower depending on the type of trade you want to take. And then you can also change from 1 minute to 5 minute if you want to do longer term swing trades instead of these quick scalps. So you can definitely switch up the time frames to find something that works better for your trade style. I'm a short term trader. I want to get in, get out, have money in my pocket and be happy and stress free. So I'm going to find where I think I can grab these 10-point moves, 15-point moves. Hopefully it turns into a 20-point move. Do that a few times a day and I'm happy with that. So I'm not really looking for the longer term setups. Now, there's a trader I know that basically only trades off of 30-minute charts and above, and he's capturing 60, 80, 100-point moves. I would love to be able to do that, but my trade personality is I'm just a shorter term trader. So it's easier for me to find multiple shorter term trades than to sit in one long trade and let it play out. So certainly kind of follow what fits your trade style and your personality. We're gonna wrap this up really soon here. There's just a few more questions, searching through these to make sure I don't have any that I didn't answer.
You have an option at top. Click the ones that, unclick that show ones that have been answered. You should get a majority of them knocked off because I did a lot for you by typing them out.
Oh, look at that. There we go, nice. Okay, so you can use Heiken Ashi on TradeStation. You have to download it offline and then upload it as an indicator. I thought there was something like that, but I never looked into it too much. So you guys can do it. You just have to download it offline and upload it as an indicator. Thank you, Robert, for that tip. Opened an account, waiting on approval. Awesome job. Welcome to the dark side of futures. How do I get access to the start room? So if you guys come over here to Black Box Stocks. Now I do recognize there's actually a lot of you guys that might not be members of Black Box. So welcome, first of all, thank you for joining us. If you guys want access to Black Box, I can help you out a little bit. It's a little bit of a discount. It's not a great discount, but it's the best promotion we've got going right now. And it does help out. You guys hit me up on Twitter at 7starmike. I'll get you guys set up on Black Box with a little bit of a discount. But if you're members of Black Box, go over here to where it says live rooms and Black Box start. That is a chat room where there's a bunch of us hanging out throughout the day, talking about options, talking about futures, talking about charts, talking about whatever we can see in the market. We've got news coming out. So if you're a momentum trader, you can find some momentum trades based on news headlines. So if you're not a member of Black Box Start, unfortunately, you don't have access to that. But if you are a member of Black Box, come over here to Black Box Start, the top room in the live rooms. And we're hanging out there talking the market all day long. There are no monthly fees for TradeStation. Less fake outs on the 34. Yeah, so that's another thing. The longer time frame, it's going to take longer to play out. So since it's moving a little slower, maybe there's a few less fake outs than something that moves very quickly. Peter, thanks for joining us. I appreciate the compliment there. Open TradeStation account, now need to fund it. Steve, welcome to the dark side. And I say dark side, it's not really, there's nothing to be scared of. Again, just have discipline because it is a margin account. Stick with the micros so you don't, each tick has a tick value. So depending on what you're trading, that will change for everything. So stick with the micro for ES, which the current contract is MESZ2. And you guys won't get, slapped in the face too much on that one. It can move quicks, but again, $5 per point. So even if you lost 10 points, that's 50 bucks. If you have a $1,000 account, it sucks to lose 50 bucks, but you'll survive and you can do another trade. So when I say welcome to the dark side, don't get scared. I love options. I love futures. I'm just trading futures now because the options flow that I like to follow is a little bit slow. Rob, thanks for hanging out. We appreciate that. Going to open a TradeStation account after the session. Christopher, welcome to the dark side. Just created a view of the chart on TradingView. Can you look to see if I got it right? So send me on Twitter. I am at 7starmike. Here is, that's me on Twitter, at 7. Don't spell out 7, it's the number, at 7starmike. So send me what you got over there. Or if you're a member of Black Box, you can also send it to me on Discord or through the Black Box DMs, and I'll take a look at your setup and see if it's what you're looking for. Roger, welcome to the dark side. Welcome to futures. If you guys ever have any questions on this stuff, remember, if you're not a member of Black Box, just hit me up on Twitter. I do respond to people. You don't have to be a member of Blackbox to get an answer from me. I'm not looking you guys up on Blackbox and saying, he's not a member, forget it. So if you guys have questions and you're not a member, you can still reach me on Twitter at 7starmike, and I'm more than happy to walk through a setup or answer some questions, and we'll get you guys over profiting on futures or options, depending on what you like to trade. Steve, thank you for joining us. We appreciate that. Peter, thank you. Al, thank you. Vicky, Anthony says, great class, thank you. Thank you guys very much for joining us. We're coming up on a good time limit here to call it quits. So I hope you guys got some good information as far as a simple strategy. Again, it takes the emotion out of it because the line crosses the other line or it doesn't. If it crosses, you enter in the direction and you stay in the trade unless the candles close above. So there's no thought process, there's no emotion involved. You will get faked out from time to time. In fact, the demo trade that I did was a loss, but you can see how it was a minimal loss. On that particular trade, I think I lost 12 bucks. So I don't care about losing 12 bucks when, previously I've made today total, probably 45 to 60 points when I add it all up. So I don't care about losing 12 of that. So hopefully you guys got some good information and a starting point. Play around with it and then adjust it based on your experience with technical analysis, with EMAs. Thank you guys for joining us. Neo, thank you for hanging out and showing some charts. If you guys are members of Blackbox, we will see you over on Blackbox Start. If you're not a member, you can hit me up on Twitter and I'll get all those questions answered for you. Once again, thank you guys for hanging out. This was the first time we've done a futures seminar. If you guys have feedback, good or bad, I will take bad feedback because if we do this again, we want to know what we can improve upon. So good or bad feedback, you can send that to me. You can send that to Swan because he watches the education program that we do, and let us know how we did. And on that note, I will see you guys over in Blackbox Start, or if you're not a member, over on Twitter. Thanks a lot, guys.
Later, everyone. Thanks for coming.